We're going to kick things off this hour here at the Business Roundtable in Washington, D.C., with the chair of the organization, Chuck Robbins, who is also the CEO of Cisco. And Chuck, thank you for being here today. There's a lot going on. You've got the State of the Union coming up tonight. We were just talking about what we're expecting to hear from the president, and you've taken over the reins at the Business Roundtable, which, by the way, is probably the most important policy group from corporate America. You've taken over the reins at what could be a little bit of a difficult time to be out front and center. A lot of CEOs are trying to find ways to keep their heads down at this point. You've got to be the spokesperson here and talk about the issues that corporate America is facing and weigh the risks between speaking out and staying quiet when you think that there are some pretty big policy issues you'd like to tackle. So what are your priorities right now as the incoming chairman? Well,
first, thanks for coming down and spending time with us. And you've had some great interviews this morning, so we really appreciate it. Look, I think that the CEOs that you've interviewed already this morning have covered most of what we're focused on right now. We obviously want to figure out how we navigate a very complicated year that we know we're going to face this year. It's going to be a difficult one. Secondly, we are focused on corporate tax. There's tax extenders right now that need to be renewed, and we also are focused on trying to ensure that there's not overreach on regulation. And obviously, when you talked to Judy earlier, a lot of focus on free trade agreements that we think are good for the American people. So those are the top four, but there's other things, obviously, but those are the things we're really focused on.
Why is this going to be a difficult year? Because we've been talking this morning about the survey the Business Roundtable put out that showed more CEO confidence when it comes to the economy.
A politically difficult year.
Okay.
Complicated year. How about that?
Because it's an election cycle?
Yeah, it's going to be an interesting year. But I think the thing to remember about the confidence survey that just came out is it was 85, which is above the average. It's been below average for the last several quarters, and historically it's hit highs of 124, 126. So I wouldn't say this is not a euphoric report. It's better than it was last quarter, but there's a lot of things we could do. The economy is actually growing, but it could be growing faster, and we think that it could be we could be doing more for the economy if we could solve some of these problems.
Are those problems related to the special question you had on the survey this summer? And I think the question that was put to the CEOs was, are government policies undermining American free enterprise? Over 75% of the CEOs said yes. 92% of those who said yes said it was excessive regulation they were worried about. 63% cited overreaching antitrust actions. So what's going on?
Yeah, well, if you think about some of the regulatory things, like the SEC, we'd like to see the SEC stick to their congressional remit, right? And some of the onerous things that they're suggesting that they may be asking corporations to do.
You mean like yesterday's vote from the SEC where they decided to say, yes, corporations are going to have to report more about the climate change risks?
Well, yeah, and we're all committed to it. Everybody here is committed to climate change, are controlling our carbon footprint and doing the right thing for it. But some of the requirements, first of all, we're not sure it's the SEC's remit to do that. But secondly, it's
their congressional authorization.
Right. But it's just an incredible amount of work that actually increases costs at a time where we're talking about inflation and we're talking about the costs that the American consumer is dealing with on daily goods. And as regulation increases costs on corporations, those costs are going to flow through. It's no different than a lot of the tariffs that we're seeing right now. Those costs are being pushed through to the consumer.
Let's talk about the tariff situation, because in the past, I would say a lot of the priorities of the Business Roundtable and other business leaders, they can find a friend in the Republican Party. It's a little trickier these days because tariffs are kind of loved by all.
Well, look, I think that when you talk about tariffs, there's a couple things that are going on. Number one, if you're putting tariffs on household goods and it reduces choice for the American consumer, it increases the cost of the American consumer. That's just math. In other cases, there are tariffs on electronic components that are largely still only available coming out of China, as an example. And companies that actually do have manufacturing in the United States are paying millions of dollars in tariffs to keep manufacturing jobs in the United States. And you hear now CEOs talking about moving those jobs out of the United States to avoid paying tariffs. So it's just, some of these just are illogical. And again, it's just a math issue.
Is that really happening, where CEOs say, forget it, we can't continue to pay these tariffs, so I'm not going to keep my manufacturing operations here in the United States?
It's an active discussion.
And the manufacturing then goes where?
It could go to Mexico, it could go to Southeast Asia, it could go anywhere.
Has there been a response from the administration when CEOs raise those issues?
Well, the latest response was that there were some exemptions that were given actually under the Trump administration, I think, and there's a current plan to actually roll back those exemptions, exacerbating the actual tariff problem. So it's going the other way.
Do you feel like the business community gets a response from this administration, from the former Trump administration?
Yeah, they engage for sure. I've been engaged with them this week. I mean, others. They're absolutely. There's open communication. There always is. So that's not the issue. It's just they're trying to do what they think is right, particularly in an election year, and we're trying to run our businesses and be effective and try to reduce the burden on the American consumer, and we just probably think a little differently about how that works.
What about the messaging that we're expecting to hear from the State of the Union address tonight? We just heard a little bit about it. Things like higher taxes on corporations, targeting executives who make more than $1 million, going after things like private jets. Does that matter?
Well, I think what we have to focus on is what is it that creates jobs in America? And so when we think about the tax extenders that we're looking for right now that are either expired or expiring soon, not being able to expense R&D costs in the United States means where are you going to put your R&D jobs? Somewhere else. And so these are the kinds of things that we think would help create jobs and help fuel the economy even above the, take that confidence factor up from 85, which is what it was today. So those are the things we're focused on.